Good morning, everyone. I want to welcome everyone to our latest session on kind of have a series on governmental related webinars. And today's session is going to focus on internal controls and really a focus on trying to, while internal controls are obviously applicable and apply to all types of entities, there's a lot of common ground. We're going to point out some specifics, both on challenges and opportunities that governmental entities face. So we have a good agenda today. Well, actually, let me back up. So CPE certification. CPE will be provided today. There's 2 hours available for CPE. You should have received an email link to be watching the session today. That link is specific to you, so you should be using your own. So CPE is only available for the one person who used their own link. There'll be a series of polling questions today. Actually, the polling questions today are actually not right and wrong type polls, more of attendance type checks. So you will need to answer 80% of those so we can qualify effectively through various state boards of accountancy for CPE. Those certificates will be emailed out after the webinar. They'll definitely be within 7 days. Typically, it's much quicker than that. But if you don't get one within 7 days, there's an email here that you can send an email back to ask about your certificate. So the presenters, we have a great group of presenters today. We'll be doing Jimmy Woodall, who's the Carr, Riggs and Ingram consulting service line leader. And he has a real heavy internal control and internal audit background. Will be leading the majority of our presentation today. Also, we have Rob Berling, who's an internal audit partner out of our Melbourne, Florida office. Also, we have Tyler Mills, who's an IT audit partner within our firm. Don't worry, there won't be a polling question to try and identify what all the certifications mean after Tyler's name. It means he knows a lot about computers, much more than Jimmy, Rob, and I. And then myself, I'm David Alvarez. I'll be the moderator today, and I'm in our Tampa, Florida office. I lead our governmental audit practice out of this office. So our agenda. So we're going to obviously talk about internal controls. We're going to do a high-level overview. We'll get into internal audit's role and how they fit into the control environment. Then we're going to focus on the COSO components. So the COSO framework of the internal control environment, and those our control environment, risk assessment, information communication, control activities, and monitoring. Then we're going to kind of finish up with cybersecurity. Why are local governments a high risk, and what can be done? So I'm going to go ahead and now at this point turn it over to Jimmy, who's going to get us started into our actual slide deck.
All right, thanks, David. We appreciate it. We appreciate everybody's time this morning. Everybody who's attended. Had a moment to look at the registration list, and we've got a broad audience here. We've got a lot of local governments, local cities, local counties. We've got school boards. We've got business development districts. We've got state universities. We've got a couple of folks from the federal government on. So good to see that. I think we got somebody from the VA. I appreciate that. I'm actually a veteran of the United States Air Force, and so I appreciate everything that the VA has done. So thank you guys out there for that. But we've got a lot of stuff to cover. I'm going to try to stay moving with this. These guys know that I like to ramble and talk, so they're going to try to keep me honest on time. But we got a lot of things to cover, and we're going to try to apply this to a broad, a broad spectrum of people. Governments are a little bit different, and they're not, it's not a one size fit all, right? Like a city government is not the same thing as a school board. Is not the same thing as as a business development district or so forth. Got some utilities on too. I forgot to mention those. We did see some of those, but so you've got some different things there. But David touched on this, and we're going to say it several times, is that the framework that we're going to go over with regards to internal control, it really applies to any type of entity, whether it's for-profit, not-for-profit, governmental, publicly traded, or regardless of size, small, mom and pop. It really applies everywhere. So all of those things are that you're going to hear today are going to apply. So, try to take note of those, and they maybe applied a little bit differently depending on your situation, but they're all applicable to what you're doing. So we'll go through that. All right. So let's get kicked off and talk about what internal control is. And so this is a definition, and it is from COSO. You're going to hear us reference COSO a lot. That's what the presentation today is based off of, is the COSO framework. And that's the framework that, probably about 90% of the world out there uses in terms of designing internal controls. It's certainly the one that the AICPA references the most often, and that we find most applicable. So that's the one we adhere to, and so that's our basis for what we use. So you'll see the definition there, and it talks about a few things. It says, you've got internal control is geared to the achievement of objectives, and that's important because we're not just going to focus on I've got to put internal controls in to make sure my financial statements are correct. Certainly that's part of it, and we will probably hit some points today that are more based on financial statements, but internal control really has to do with all of an organization's objectives, whether they be operational, whether they be compliance driven, whether they be having to do with internal reporting or external reporting with financial statements. So it has to do with a lot of objectives, and there can be internal controls in any way. Right. So, and some of these overlap. You could have a situation where maybe if you're a county government or a city government and you've got a federal grant, right? So you've got internal controls related to your financial reporting, but you also may have to have controls related to compliance for that federal grant that may come up along the lines of if you have a single audit. So some of these things, that's just an example, but some of these things may overlap. All right. So it is a process. Very important to remember. A lot of people think that internal control is just, I put these things in place. I do a reconciliation or a management review every so often, and I'm done. It's not. We're going to talk more about this as we get into COSO, but it's really a process. An ongoing process where you assess your risks, you identify what they are, you assess them, you determine what is in place to deal with them, how you want to deal with them. Some of them you want to mitigate, you put controls in place. Then you assess those controls to make sure that they're working. You go through and you make corrections on what didn't work, and you modify things based on the changes in your processes or the changes that you do. And then the circle starts all over again. If you, kind of lack off of these or slack off of one of these, everything goes stale after a while and it gets old. And so your internal controls tend to become ineffective, excuse me. So it is a process, and you want to make sure that you're on top of that. It's affected by people. All right. So each of you out there listening on this webinar, so it's affected by you. It's not just about putting together a policy and procedure manual. It's not just about putting together an IT system. It's about the people who are in different levels of management and who are in different levels of governance. So, and I'll stop here to talk about governance. The COSO framework talks about and uses the term board of directors a lot. And some of you in your organizations, you have a formal board, some of you don't. But that should be used interchangeably with some level of governance that you have. And that may be, a school board, that may be a city council, or some type of government legislative body, but there's somebody, some entity level there's of who's somebody who's in charge of governance of your organization that everybody else should report to. And the way that the framework sees that is that those things are all kind of interchangeable in terms of board of directors and so forth. But the way that this works is that regardless of what form that those in charge of governance comes in, their roles really will be very, very similar. And in terms of how they set the tone at the top for how internal control is carried out. And we'll talk about some things that they can do or that you might look at to see that, can help to make that more effective. But that trickles down to management or senior management, on down to management and functional levels as well. But again, it's affected by people at all levels of the organization. Whoever that top level is, whatever that looks like for your organization, all the way down to the person who's, processing invoices, cutting checks, even if you're a city government, whatever, somebody who's picking up trash, or somebody's on police force or whatever. All of those, again, top level all the way down to the functional levels, whether it be financial, operational, or compliance driven. Okay. It's about providing reasonable assurance. All right, so that's part of it too. And again, that's very, very important to remember. Just like nothing that any auditor does or anything that is put in place, nothing provides absolute assurance. There's always something that could go wrong. There's always some inherent factors that go into this, inherent limitations on internal control, particularly the more that you have people involved. People are human, humans make mistakes, and sometimes those things break down. But it provides, internal control should be able to provide a reasonable assurance that you are achieving your organization's objectives. And then it should be adaptable to the entity structure. Again, I mentioned that we've got several different types of organizations on here, but this framework, the way internal control works, is that you can adapt that and change it to what your entity's objectives are. Again, whether they be operationally driven, whether they be compliance driven, whether they be reporting driven. All right, so now let's talk about a system of internal control. So you're putting all these things together. Again, it's not just one control, but you want to have a system, right? And so internal control helps entities achieve their objectives, and it helps them improve or sustain and improve in performance. That gets a little bit more into the operational side, but you guys are faced with budget cuts. You've got an operating mission, you've got things that you've got to do, and a lot of times you're faced with less funds to do that in. So certainly you want to perform operationally better, right? And so that might be a situation where controls can come in and can help you make sure that you're doing things more efficiently, but certainly more correct in terms of reporting and compliance. You certainly want those things as well. So system internal control, it helps organizations adapt to changing environments. Talked about that. Mitigate risk to an acceptable level. That's what, at the end of the day, that's what you're trying to do. And we'll talk about risk assessment in a few minutes, but you want to identify risks and you want to make sure that you're putting things in place that help mitigate that risk, help get it down to where you can live with it, right? As much as possible. And support your decisions for making for managing and governing your organization. The internal helps provide information that helps management make those decisions. And so some of you out there may need those things out there, may need the controls that we're going to talk about and have in place to help you better make decisions. Any system of internal control needs to be agile. So again, you don't want something that's completely rigid. You want to be able to change it as needed and move that around. All right. Talked about the last bullet point here. It's more than just a rigorous adherence to policies and procedures. I think we kind of touched on that already. But again, if you get into the definition, there's a lot more involved in terms of peoples and processes and how this goes together. But we'll get into the details. All right. So here is a graphic that you probably, or most of you have probably seen. It represents the COSO internal controls framework. COSO's got a couple of frameworks out, but this is the one on internal controls, and so this is what we use to base everything off of, right? And so you'll see there on the top, you've got operations, reporting, and compliance. Those are objectives. This is how it's broken down. Again, when you start talking about operations, you start talking about things like performance, physical safeguarding of assets, things of that nature. You want to be operationally effective and efficient. And so you have controls related to that. The second one is reporting. That can be internal reporting. That can be external reporting. It can be financial reporting. It can be non-financial reporting. There may be different types of reports that you have to put together for various stakeholders or various, board members or governance members. It may be, it may be some type of publication that you have to put out. Most of the time it's going to relate to reporting on your financial statements. That's the big one there, but there's other things that are involved as well. And then there'll be compliance, and compliance is typically is when you have some type of law or regulation or rule or something that you have to comply with. And so you want to make sure that you have controls in place to make sure that you're doing those things. All right. So on the front face of the cube, you see the 5 components of internal control. And we're going to go through each one of these. And we're going to talk about the principles that make up these. And we're going to talk about some things that you can do to help kind of at a very high level that you can do to try to make sure that you are addressing those components. All right. So control environment, again, everybody says it, but it's kind of the tone at the top. We'll talk about these in detail in a minute, so I don't want to get too much into them. Risk assessment is you identifying what's out there. What are the risks to you achieving your objectives, to you to operating effectively, to you having correctly reported financial statements, to you complying with that law or that regulation. And control activities are what you select, are the mechanisms that you put in place that you select and put in place to address those risks that you've identified. And then information and communication is part of it is the IT system that you've got in place to help process your transactions, to help process your information. And then it's how you communicate your internal controls internally to your folks and externally to business partners, to stakeholders, or to those outside of the organization. And then monitoring, in a nutshell, is what you do to make sure that the other 4 are working right. What do you look at yourself and with possibly an external partner or an internal partner? We'll talk about that. But what do you do to look at to make sure that the internal controls are functioning correctly? And if they're not, what are you doing about it? Are you timely addressing those, identifying the reasons that they're not, and addressing those and correcting? Okay. So over on the side of the cube there, we talk about those are the different levels of the entity, and you see that it's if you turn your head to the left, you can see that you start with the entity level. That's the top level, right? That's the very top things and functions that are going to carry across the entity, and then it may go down to a division or an operating unit, and then all the way down to a specific function in terms of that. So I mentioned a second ago, but internal control starts at the top and it cascades down to each level of the entity that you have. All right. Okay, so let's talk about what effective internal control looks like. What does that look like and what does that do for you? So we mentioned earlier, it reduces to an acceptable level the risk of not achieving an objective. You want to make sure you're achieving your objectives, and so internal controls helps with that. It requires that each of the 5 components and their relevant principles is something called present and functioning. Means they've got to be there. Won't go into a lot of the detail on this because I'm trying to cram a lot of stuff into a 2-hour course. So I won't get into a lot of that stuff on detail. But basically, you want to make sure that each one of these components that we're going to go through is there, it's functioning, it's what the objective of that is there is happening, and it's working the way it's intended to work. It's there and it's working, present and functioning, right? But an important part of that is to make sure that it requires each of the 5 components and the relevant principles. So all 5 of those things that we just went through all have to be there. And there's 17 components spread out among those 5, 17 principles spread out among those 5 components that we're going to go through here in the next part of the course. They've all got to be there too. And so that's kind of the basis of what we're talking about is for internal control to truly be effective. You got to make sure that all these things are addressed. And some of them you may not think about because it just, they may be just kind of obscure and you're like, I didn't realize that was there. But the framework does a great job of laying these things out. And again, we're going to cover it at a high level due to time, but hopefully you can get some ideas out of this and some things that might help you out and on some things that you may not have even thought about. All right. It requires that the 5 components work together in an integrated manner. So it's not like you can say, well, my control activities are great. When I'm trying to put my financial statements together, I do great reconciliations at the end of the month. We do all those things. We've got supervisor reviews over those. What else do we need? Well, that's good, but if you've not properly done risk assessment, you don't know that you've got everything covered. Okay, if you're not properly doing monitoring, you're not testing those controls to make sure that they're working as well as you think that they're working. If your information system is not in place correctly, you don't know that the information that you're processing is good. And so you might be reconciling bad information and your control activities are not working correctly. So all of these things work together, and it's important that they work together. Okay. The last bullet point there is management exercises judgment and assessment. All right. So the framework requires that all of these components and these 17 principles have to be there, requires that, right? But it also doesn't, prescribe a specific process for how management assesses the effectiveness and how it puts these things in place. So again, if you go back a couple of slides, where I talked about agile, this has got to be agile. It's part of that. There's going to be some flexibility. No two entities are the same. No two entities are alike. And I teach and coach and consult places saying, you can't just, copy and paste what another place has done. Your company is different than other folks. And so we want to make sure that we're addressing the specific risks and the specific needs that we've got at your entity and not somewhere else just because you think that they're similar. Every place is different. And so you want to look specifically at what you've got. All right. I think we're at a poll question. Is that right? Looks like it.
Got our first polling questions, and we go ahead and launch the poll. So everyone should see it up on their screen. So again, these are more like attendance checks. So how do you feel about your organization system of internal control? We kind of should see four options here. And I think we, from our experience, we encounter probably all four options. And
I would agree. Yeah.
Yeah. So again, and I'll say it a couple times today. So in order to get a CPE, you got to be sure that you're answering 80% of these polls. So we'll give it just a couple more seconds. We'll share the results. So about kind of spread in the middle, not too much in the nauseous area, which is great to see.
Good to see. Good to see. All right. All right, we'll move on. There's our question. I should have clicked the next one. I apologize. All right, so now we're going to get into the next section where we talk about internal audits function. So, and this is when David mentioned that I've got a deep control background. So I spent, I've been doing this for 20 years, and I've spent some time working in industry outside of public accounting for a while. I was the director of internal audit for a very large international company, and so I've got some time doing that, doing risk assessment, just doing all of these things, and it's something that really has kind of developed as a passion for me, because I find it as a way that that we can help as a public company or public CPA firm. Sorry, stuttering this morning. I find it as a way that we can consult and we can help our clients a lot more. There's things that your internal auditors can do that your external auditors can't do there because they're bound by independence constraints. And there's a lot of things that you can do that you just really help your clients add value. And so I enjoy that. I've got a passion for that. So I'm a little bit of a geek. I know Rob Rowling, he's on here. He does the same thing with internal audit. That's pretty much all he does. He specifically does it with governmental entities. And so I'm going to have him chime in here on a couple things here in a few minutes. But I think internal audit's a good thing. So we want to talk to you a little bit about that and internal audit's function in the internal control role. All right. So I've got a definition up here, just kind of, for those of you thinking about internal audit, or think, what you think internal audit is. This definition is from the IA, Institute of Internal Auditors. It's an independent, objective assurance and consulting activity designed to add value and improve an organization's operations. And I think that mostly says it all right there. Again, it's the consulting activity. It falls underneath my area. David mentioned that I'm the consulting service line leader here for the firm. And so this is one of my areas and one of the things that we like to talk about. But that's what we want to do. We want to help add value to our clients. We want to improve your operations. We want to help you, to improve your internal assurance that you have. We want to help you sleep better and those type of things. Second bullet point there, it helps an organization accomplish its objectives by bringing systematic, disciplined approach to evaluate and improve the effectiveness of internal control. So that kind of goes into, how you evaluate your controls in terms, how do you make sure those things are working as you intended? And there's ways management does that. There's ways that they can go about doing that, but it's kind of, sometimes it gets a little haphazard. Internal audit helps bring structure and a systematic way to doing that that gets you the answers that you need. Okay. So a little bit with this, and some of you may not be familiar with internal audit. I would say up till about probably 10 years ago, I wasn't that familiar with it. So until I got going into that. So I was an external auditor as solely after that. So I want to talk a little bit about primarily what the differences between an external audit and an internal audit are and what you get. So who does the external audit report to? Obviously, they're helping you issue financial statements. They're giving an opinion on your financial statements that go to the public or go to the stakeholders outside of your governance structure, outside of your school board or your board of directors or your city council or whatever the entity may be. All of those folks that gets to see your financial statements. The internal audit with that, they're typically going to report to senior management or somebody on the board, an audit committee or equivalent like that. They're going to talk to the top levels of the organization. They're going to report to them, and again, their primary purpose is trying to make things better. So that kind of goes into the objective piece there. External audit, you're trying to add credibility to the financial statements, making sure they're reliable, making sure people can, the external stakeholders can get an idea of what's there. All right, internal, you're evaluating and you're improving the effectiveness of governance, and you're helping management manage better. Tongue-tied. Coverage. When you think about that, the external audit is going to relate solely to the financial statements and the risk reported in that. Internal audit can cover that, but it also covers, the other ways, the other things that you're looking at, like we talked about operations and compliance, other types of risks and objectives. It also covers a full process. It's not just auditing the numbers that you're in. It's covering helping you identify risk, helping you assess those risks, helping you manage them, determining if you have controls to mitigate them, if you want to outsource that risk, if you want to ignore the risk. And there's a process in evaluating that and determining what you want to do. And then, of course, reporting and correcting those or addressing those. The responsibility for improvement, an external auditor really doesn't have any. They are required if you find issues, there is a duty that you're supposed to report those. If you find issues within the entity, you're supposed to report those and say, here's a control problem that we noted, that you do that. But there's no standard requirement for them to do that. Internal audit, the IA standards and the AICBA's consulting standards require that you are responsible for helping the entity improve. You do that through advising and coaching and facilitating, and trying to help management again improve. So it's more of an advisory function. Internal audit is in terms of helping you get better, helping management manage better, helping you again identify, assess, manage risk. Okay. So this is just kind of a sheet that I put together here that just kind of lists the overall items that internal audit really does. So they do this thing called enterprise risk assessment. You may have heard of that, but that's again part of the risk assessment component. But it covers all forms of objectives for a client, where they help you identify the risks that you have. They help you identify your objectives, identify your risks to those objectives, and determine what you're going to do about them. A lot of times we'll go in and we'll help entities with policy and procedure development. A lot of times our smaller clients that are kind of growing and just getting started, or maybe they just don't have a lot of good control background. Maybe some of those folks that answered nauseous on the previous poll question. We can come in as internal audit or any internal auditor and help you develop those things, help you set up your processes and policies and procedures. Governance assessment, as internal audits do that, they'll look at who the governing body is and say, are they adhering to the things that they need to do, or could they improve on how they're set up as a governing body to address the control environment component that we'll talk about in a few minutes. Process assessment, that's, is this process effective? Is it efficient? Is it doing what it's supposed to do? Or can we find ways to improve processes? Again, it's a consulting function. IT and cybersecurity assessment, that's another piece of it. Tyler's going to talk about that toward the end of our presentation today, but that's a big one, particularly in today's environment. A lot of things going on there. Controls assessment and optimization. That's kind of what we've been talking about, or really what we have been talking about in terms of getting someone to test those controls regularly for you, making sure that they're doing what they're in place and they're doing what they're supposed to do and they're operating effective, and getting them fixed if they're not. Regulatory compliance, again, that's the same, along the same lines. Are we meeting our objectives there? Fraud and forensic investigations. We do that a lot, actually. And I say we as internal auditors. I did that when I was an internal audit for the company that I work for. I did a lot of internal forensic investigations when things came up. And unfortunately, on a multinational company, they do quite a bit. And then, you guys may have experienced some of that stuff as well, but those things happen, unfortunately. And so internal audit helps provide an objective way to investigate and evaluate those things. Contract compliance is another one. We've seen a lot of those where organizations have contracts with vendors, and there's questions. Hey, is this other party living up to their end? And so we've done evaluations and things on that as well. All right, I think we got the next poll question, and I think poll question's there. All right.
The question is, does your organization have an internal audit function? And that would be either an in-house person, or do you outsource an internal audit function? So Jimmy, I'm not sure, maybe just a question. Are you seeing internal audit growing and more entities go that way?
I think so. I think as more people become aware of the risks that are out there, and entities, trying to grow and trying to, just to make sure they've got all their ducks in a row in terms of policies and procedures and just the basic infrastructure to grow. We see more advisory functions like that. Maybe not from our side doing a full internal audit where, and sometimes an entity, of government or another entity would do that, where they would just fully outsource their internal audit department to a firm, or they would hire in-house. So you may not see as much as that, but a lot of those internal audit type engagements are coming up simply because management is more worried about risk. There's different things that pop up, and it seems like we've got more stuff all the time, and so we are seeing more of that stuff just because management's more worried about the risks that are out there, and they want to make sure that they've got their bases covered.
I'm going to go ahead and end our poll, share the results so we can all see. So 65% said yes, they do have an internal audit.
All right. Good to know. Good to hear. All right, so we're going to move on and move into talking about control environment. We'll go into the 5 components of internal control and talk about the different principles. And so with these different principles, we want to talk about some ways that you might be able to apply these principles, or some things that you might be able to do to make sure that you are living by these principles. I would say, if that's a way to say it. So, and a lot of the stuff again comes from the COSO framework in terms of their examples. So there's some good ones, but there are things that we found to be best practices as well. So the first principle the first 5 principles are related to control environment. And again, as we talked about, that control environment is kind of that tone at the top. It's your organization, it's your governance, your senior management, the tone that they set, the way that they dictate how the controls are going to be handled, and the attitudes, the way controls are going to be handled throughout the organization. So the first principle that you got there is that, are they demonstrating a commitment to integrity and ethical values? And these principles, I'll say this, these principles are actually worded a little bit lengthier, but COSO also provides an abbreviated version. And so I put the abbreviated versions on here just because we've got a lot of stuff there. But so if you're looking at this, so the first one here is, again, is your entity, particularly those in charge of governance, are they demonstrating a commitment to integrity and ethical values? That's the tone at the top, right? So a way that you might be able to accomplish this is, have you established a standard of conduct, some type of code of conduct there? Are they as in the board or other body like that, or senior management, are they defining, communicating, and regularly updating that code of business conduct or ethical standards, or whatever the publication is? If you establish that, and is it normally or regularly being updated? Are they leading by example on matters of integrity and ethics? Something like that. Maybe are they sending a newsletter to reinforce their expectations? That's a way to get that out there. But that needs to come from these pieces here, from senior management. If those of you are out there who are in senior management, that would be you, or whoever this governing body is. Again, city council, board of directors, school board, et cetera, et cetera. But a newsletter, that might be a way to do that. Might be a way to lead by example and make sure that you are communicating your expectations. Last one that I've got on this page, evaluating management and other personnel, service providers, business partners, et cetera. So if you have part of the service providers, when I say that, I mean, maybe you've got a service organization that might process payroll or some type of transactions, or something's outside of your entity, if you've got something like that, or some other type of service, could be. But are you conducting maybe conduct ethics audits or evaluating misconduct reported through an anonymous hotline, something like that? So maybe you could have something that where you're regularly evaluating the people that you're doing business with, or that you have contracts with. Do you have some way to evaluate how they are viewing ethics and what are they doing? All right, same principle, just continued. A couple more things here. Developing processes to report and properly act on deviations from standards of conduct. So that's important. It doesn't make any sense to have a standard if you're not going to do anything about it if somebody violates the standard, right? So you want to make sure you've got something in place. And so you want to make sure that, when it happens, that you have a process in place to take action and to correct it when you've got somebody who violates your standard. Okay. Moving on, principle 2. Exercise oversight responsibility. Again, this is going to relate to the board, to that governing body. And again, a lot of times you'll see that I've got board or BOD or something listed in here. Use that interchangeably for whatever that body is for your particular organization. But all this applies. So the first one there is the board establishing roles, responsibilities, and the delegation. Is it coming from the board? Maybe you might review or document certain key activities. Maybe you've got an audit committee or a certain type of committee within the board or within that governing body that has a certain function, and that you may be regularly reviewing the activities that they do and document what they're doing, saying, this body does this and this body does this, or this function does this. You might review if you're a governmental agency, you might review your financial results and the underlying controls of that, and saying, this control was addressed and led to this. Maybe look at segregation of duties along those lines. The next one, establish policies and practices for meetings between board and management. And this is a key one, particularly I think with you guys in government, because or some of you anyway, because I don't know how often a lot of your senior management interacts with whoever that governing body is. And so you should establish and document, like regular meetings. And not to say that you don't have regular meetings, but, maybe those meetings need to be increased. Maybe you need to, document a regular meeting calendar and set up an agenda and say, okay, these are regular routine items that we're going to cover every meeting, and we're going to do it on this date, this date, this date, this date. And I know there's like city or council meetings and things like that. I know those things happen. But a question is how often is that body interacting with your senior management? And again, I'm not, it could be different depending on the type of entity you've got, how that happens, but just keep that in mind. So the purpose here is that you want to make sure that whoever that is in charge of governance, that they're regularly interacting with management, they're regularly having meetings, and they're purpose-driven meetings. they're documented, they're routine, and they're purpose driven. And then there's some items that you're going to be reoccurring on that. Okay. Let's see, what's our next one? Identify and review board candidates. And this is one, again, this is the framework at Broad. So some of this may apply to you and some of you may not. The principle applies, but you may not be able to control who your governing body is. That may be done by an election, right? That's out of your hand. But in most cases, the way that the framework is set up is that you want to try to assess, who are your directors or your committee members, and maybe your elected body can select committee members depending on where you are and what state and jurisdiction and so forth. But the purpose there is saying, do those in charge of governance have the skills and the competence that they need to correctly provide this oversight? When we look at, particularly we do some consulting like for some not-for-profit entities, and we're trying to help them set up boards. We'll say some things like, do you have somebody on the board who has a finance background, who understands the things that are being brought to you from a perspective of finance and the financial statements? And does somebody maybe have a legal background or those type of things? So you're wanting to see, does your board or your governing body have certain qualifications to allow them to effectively govern and look at the objectives that the entity is trying to achieve. Okay. So, and again, recognizing that, and for some of you, that may be completely out of your hands. But these are good things to make sure that helps establish the appropriate level of governance, helps establish that oversight, and helps making sure, again, that tone at the top is established, and that the attitude toward internal control cascades down through the entity is making sure that these things are correct. All right. Last one there, review management's assertions and judgment. That's, that has to do with financial statements, but do you have somebody who's reviewing financial statement estimates, those fuzzy numbers that go into financial statements, and where do they come from, and what are the assumptions that go into those things? Okay. All right. Still on oversighting or exercising oversight responsibility, obtain an external view, interact with your auditors, external or internal. Are you getting, what is their feedback? What are they offering to offer improvements to internal control and what they're doing? And again, keep in mind, this is control environment. So this is primarily focused on the level of governance and senior management, but it's important that those levels get that type of external views and feedback, constantly try to improve internal control throughout the entity. All right. The next one, consider whistleblower information. Do you have some type of whistleblower program? Do you have that ethics hotline? Do you have something, some way that folks can, if they see something, if they see an issue, particularly with internal control or some type of fraud or issue, can they report that? And what is your process for assessing that? More importantly, what is your process for assessing the management override of that? I touched on it earlier, but there are inherent limitations to controls, and management override is a limitation of controls. So controls are not going to work if management is just overriding the control and ignoring it. And so this is one of those areas, and one we look for, frankly, in all of our work that we see about fraud. If we see issues where management is overriding controls, that's a big fraud risk. So what are you doing there? Is a possible way that you do it? Do you have a program for that? And how is that process for assessing issues that come up through that process? All right. Principle 3, establishing structure, authority, and responsibility. And so the first one is define roles and reporting lines. What does the org chart look like? And does it make sense? Based on people's roles and their responsibilities for what they have to do, is your reporting structure set up appropriately to make sure that those objectives are met? And again, I realize I'm talking at a high level on some of these things, and I apologize. We're having to do that for sake of time, but hopefully you get the picture on that. All right. The next one, defining authority at different levels of management. The same thing goes along with setting up org chart and making sure that the reporting lines make sense. Does each level within that make sense in terms of what they're doing? And that may have to do with your approval matrix in terms of who can approve invoices at this level or this level or this stuff like that. But do you have something like that set up? Does that make sense given what your org chart looks like and what the roles and responsibilities are? Last one here is this is one that we see a lot that just kind of it kind of gets done once and kind of gets thrown in a closet and forgotten about. But maintain job descriptions and serviceable agreements. Make sure your agreements and all of these documents are up to date. Make sure that your job descriptions align with your objectives, what you're trying to do, what you want, what your organization is supposed to do, and all of those objectives that you're trying to get out there. And maintain control when you're using outside service providers, and keep those up to date. Again, that's a big one that we see a lot, is that these things kind of go stale. All right. Principle 4, demonstrate commitment to competence. So the first one there, establish the required skills, knowledge, and expertise. Do you have the right people in the right places? And so for all of you out there, we'll kind of flip this to an example. When you have your external auditors and your external auditors come and they do work, and maybe they have to make an audit adjustment. When they make those audit adjustments, they will ask you, do you agree with this? And you say, yes, and so forth. And they have to put a communication sometimes in your rep letter or in your even in your engagement letter up front that says that they may have to do these things. And the reason behind that is that they are required to identify folks who have the required skills, knowledge, and expertise. You have to be able to understand what it is they're doing. They're doing it as part of an audit, but they need somebody on your side to be able to understand that so they can maintain their independence. And so you want to make sure you're doing that, right? You don't want somebody just booking something and you not having a clue what's out there. So you want to make sure that your organization has got the required skills, knowledge, and expertise for whatever it is. I used the financial reporting example, but it can be for a lot of different things. And so what is your entity's commitment to competence? How are you demonstrating that? Are you going out and making sure that you get the right people for the right jobs? And that goes in directly into the second one, is linking competence standards to established policies. So if you got these policies and these things in place, what are you doing? Are you hiring people, and are you training people, and are you retaining people to make sure they fit to the standards and the objectives that you've set out? Do all of these things map together, and do they line up? Okay. The last one, identifying and delivering objective related to training. That can be something like what you're doing now, that your entity has demonstrated that you need to stay on top of something. So you are going to a training course of some type to make sure that you're up to date on things. Particularly, you've got there's a new GASB coming out, a new accounting standard, that has to do that you need to make sure that you understand. So your entity sends you to a particular training session to learn how to do that. So that's what we're talking about there on the last one, stuff like that. All right. Evaluating competence and behavior. How often does your organization perform evaluations, performance evaluations, and audit committee assessments? And I say audit committee assessments if you've got an audit committee or some subset of that governing body who's over those type of functions. Are you evaluating those people in those roles, and does that make sense? Are you evaluating employees' performance? How often are you doing that? And honestly, that's another one where we see some things that people kind of slip on. And so that's, it doesn't seem like a very big thing, but it's a piece of a bigger piece of internal control. And so we're trying to make sure that we're staying on top of that. So you want to do that. Okay. All right. Next one, moving along. I'm trying to speed it up on time because we've got a lot to get through. And again, I realize I ramble a little bit. So, all right. So evaluating the capacity of departments. This is one that many of you out there may take to heart. Does the entity assess staffing levels, and are they aligning your competencies with key positions? Do you have the people that you need to do your job, right? And to meet your objectives. And then the last one there, probably not going to apply as much to you guys, but it has to do with, developing alternative candidates, excuse me, some type of succession planning. And it doesn't mean who's going to take over the business after dad dies or something like that, but it could mean, if you have someone in a key position is getting ready to retire, do we have somebody in position to move into that? So it applies, but just not in probably the traditional sense that you're thinking. All right. The next one enforces accountability. All right. So defining and confirming responsibilities. We've talked about this, but we want to make sure that we're cascading responsibilities throughout the organization and that we're able to certify results. The next one, developing balanced performance measures, incentives, and rewards. Kind of makes sense. Do you have policies in place to encourage certain behaviors, to encourage control-driven behaviors, right? And then, of course, you got evaluating performance measures to see for your intended influence, and linking compensation and awards to other performance. So all of those things having to do with, either positive or negative reinforcement of accountability towards your internal control environment. All right, we got a poll question.
Go ahead and launch it. So how would you rate your organization's body of governance for effectively establishing the control environment and setting the tone at the top? So that's something, Jimmy, we talk about quite a bit, from the audit side is looking at tone at the top. It's so key.
It absolutely is, David. It's kind of one of those things. If you come in and it's a mess at the top, and you don't have that attitude toward effective control, and you don't have, just a general sense that that things are there's expectations of how to do things and how to do things the right way. It's really kind of a red flag on the external audit side to say, it gives you kind of a nervous feeling a little bit about the rest of the entity's processes, about how they go about and putting things together. So it adds a little bit of audit risk. It certainly means more procedures that the external auditors got to do to try to get comfortable with those financial statements. So internal audit, tone at the top, control environment, extremely important. Right. It's really it's the foundation and the driver for the rest of internal control. All right, a little bit mixed there. That's interesting to see. All right.
Thank you.
All right, so now we're going to get into risk assessment. And principle 6 here, risk assessment. It really boils down to, again, identifying, determining what you want to do, identifying the risk to what you want to do, those risks to those objectives, and then addressing those. And the way that COSO spells it out with risk assessment, it goes into different types of objectives. I focused, for purposes of time on this, I focused on the ones related to financial reporting. But there's one out there for compliance and operations and so forth. But it kind of takes a fork in the road related to this principle. So that's where we're going to kind of spend a little bit of our time here now. So when you look at this and you identify your risk, the first one there, it's, are you linking your accounts and your assertions and your risks? And we talk about assertions, again, we're talking about, those things like existence and completeness. How do I know that all of my, all the accounts, all the expenses that I have listed here, how do I know that those are recorded in the right period, and that, they're to the right, right vendors, and do their the right amounts and so forth. So you're checking all of those things, those financial statement assertions that are out there. And so what are you doing in terms of linking those things up and making sure that you've got controls in place to address those? Specify reporting objectives. That's pretty simple. Say, what if I want to report GAAP financial statements and assess whether their policies are in compliance with GASB? That's an objective. So it's as simple as that. And then you would roll that down to sub objectives. So to do that, I make sure that this account's right, and I make sure that that this fund within my broader set of financial statements are right. Those type of things. Okay. Assess materiality. And I know this is something that you think of with your external auditors, but it's also something that you need to think about. What does that mean? What does that mean to to the overall set of maybe the government-wide financial statements? Does it, if it's an enterprise fund or a separate fund, there's different levels of materiality in the different ways that these things are presented. With you guys with government, it gets pretty hectic in terms of financial reporting. And so, what does it mean to the users of the financial statements? And just like with an auditor, that's where you're going to focus most of your attention. Those are the things that matter, right? But that's part of internal control. That's part of why auditors do it as well. Okay. The next one, review and update understanding of standards. You need to know GASB. That's make sure that you're up to date on all the new pronouncements, right? And consider a range of entity activity. Do the financial statements reflect the knowledge of the board and management review? So when you considered a range of entity activity, and that statement that I just said is that are there certain things in there that if a board member or a governance person read the financial statements and they would say, well, we've actually got this transaction or this thing going on, or this merger or whatever, something that they're doing. Do the financial statements reflect something that they know that everybody else needs to know? Is that in there or not? So that's what you want to make sure that you're including in those type of things, all the way down, to management who puts the financial statements together, all the way up to governance and things that they may know that they may be making decisions on that affect or would need to be disclosed within the financial statements. Okay. So moving into principle 7, and this is identifying and analyzing risk. And this is where you get, again, deep into risk assessment, right? So applying a risk identification process, that's going to be that enterprise risk management process that we talked about. Again, that's something, and I want to bring in a couple of examples here, but with Rob in particular, but that's an area where internal audit can really, really help you. Making sure that you get a broad risk assessment across the entity, not just related to financial statements, but across your entity and what your objectives are. All right. Meeting with entity personnel. What about IT risk? Maybe are you making sure that you're meeting with those folks, people in different offices or across the entity? Are you meeting with them, and are you including them in your entity risk assessment? All right. Assess the likelihood and significance of identified risk. You want to rate your risk and identify possible responses and benchmark data and create something that's called a heat map. I'm going to actually show you an example of that in a minute. Have Rob talk to you a little bit about that, for one that he's done recently. Consider internal and external factors. External factors. Has anybody heard about this pandemic thing that's happened recently? And has that had any effect on how you run your office or run your organization, or money that's coming in or money that's going out? Absolutely. And so, do you consider something like that in your risk assessment, or the possibility of something? I think you probably would now, right? So, because the unthinkable has happened over the last year or so. All right. But that also includes other things too. I don't want to just focus on, end of the world pandemic thing that we all go through, but things is like, what if you had changes in your IT system? Have you had changes in your staffing? Have you had changes in vendors? Things like that. And those are other factors that might fall into internal and external factors that would affect your risk assessment. And then you have evaluating your responses. And so, we talk about controls, but you don't have to apply controls. There's different things that you can do when you look at risk. You can say, I'm going to just completely avoid a risk related to something, meaning I'm just not going to go down that path. I'm not going to pursue whatever objective it is that has that risk. I'm just not going to do it. Or you can accept the risk and just say, yeah, I'm willing to roll the dice and live with it. You can share the risk, meaning you can say, I want to get some insurance and transfer that risk onto someone else. or you can reduce the risk, and you can put a control in place to try to reduce it to an acceptable level. But all of those things kind of fall into risk assessment and risk management. All right. The next one is assesses fraud risk. This is huge when you go into when you go into the risk assessment factor. And I'll say this: I've been doing this for 20 years, a little over 20 years, and I would say in that time frame that probably 90% or more of the fraud that I have seen has come either at a governmental entity or a small not-for-profit entity. And a lot of that is because some of them just, they don't have the controls in place, or sometimes there's some attitudes there that they don't need to pursue certain controls. And but that's a lot of times where they seem to fall. And so this is a big one. So this is one that we try to coach clients and prospects on. Hey, don't take these things for granted, because those things are out there. And with you guys, more so than if you find fraud in a private entity, when it comes down to you guys, it goes straight to the newspaper, right? And so it's a big deal. So not to say that fraud anywhere is not a big deal, but it seems to get a lot more publicity. So this is one that we coach folks to make sure that they're taking seriously, and make sure that they're definitely building into their risk assessment. All right, so you can see the items there. Make sure we're doing fraud risk assessments, building it into your larger risk assessment, looking at approaches possibly to where, again, can somebody circumvent or override the controls? If you're using internal audit, how is your internal audit department or internal auditors, what have they built into their internal audit plan specifically related to risk? And then look at your own policies and procedures and say, what do we have here as far as incentives or pressures that almost, again, reading the word there, incentivizes fraud? Is there something there that would somewhat encourage that? All right.
All right. So we're going to kick off polling question number 4.
Did I miss one? Did I miss a slide?
I'll just go ahead and read it off. So according to the 2020 report to the nation, this is every 2 to 3 year report issued by the Association of Certified Fraud Examiners. What source most often initially detects fraud? So is it identified by internal auditors, by accident, by external auditors, or by whistleblowers? It's a report I've been reading for quite a while. I really get a lot of great information from it. And this area specifically, the percentages stay remarkably consistent of where fraud is identified.
Yeah, this really is a great report, David. I think they put it out. Was it every 2 or 3 years that this organization puts this out? But it's a lot of good information, and they break it down like 50 different ways, and it's very telling in some cases.
So we got about 88% people voted. Just give it a little more time. We'll go over the answer. All right, I'm going to go ahead and share the results. And I will say that 46% selected whistleblowers, and that actually is the correct answer. So 43% of frauds are identified by whistleblowers. So by far the most. Coming in at number 2 is internal audit at 15%. Accident comes in third at 5%, and external auditors are at 4%. So great job by the group today. Got them in the correct order here.
Awesome. All right. There it is. All right. So principle 9. Again, this still relates to risk assessment, is on identifying and analyzing significant changes. Again, change is risk, right? And I touched on this earlier, but do you have changes in your external environment? And how do you react to those? Again, when you talk about external environment, the obvious example is COVID. But how has your organization reacted to COVID? How have you had people who have not come into the office and work from home? And how does that affect your internal and control environment? How does that affect how transactions are processed in your office? Is it the same? Is it better? Is it worse? I'm not not saying one way or another, but that's a change. Those are things that you have to look at. How does that affect the funds, the cash flows coming into your organization? Is there money coming in, coming down from the feds? Is it coming, where's it coming from the tax basis? How's the money going out? You're probably spending money on things differently, and cash flows going to things differently than were anticipated originally. So there's changes in there. And so how do you react to those changes, and how does that affect your risk assessment? And so again, a lot of time we just kind of get caught up in the moment and things, and everything's happening so fast, but we don't take time to realize or analyze how this actually affects the risk of our organization. Changes in the business model. How are you doing business? Are you doing something different? Maybe if you've got a new tax that's been issued, that's going to be something new that was not there before. A new use of technology that maybe you didn't do before, something like that, and basically a change in how you operate. That's what the second one is there. And then of course, assess changes in leadership, and that's that's kind of self-explanatory. All right, so now I want to talk about some things in terms of risk assessment that Rob has done recently with internal audit, and some things that he's seen. Rob, you want to jump in here and talk about this for a second?
Sure, thanks, Jimmy. So here are some of the items. We did some surveys and working with public entities, including school districts, cities, and counties, and kind of did a survey not pretty recently, a few months ago, and you can see, not surprisingly, that COVID-19 was the top of the list when asked what things from a risk standpoint they were concerned about. We often say, what things keep you up at night? And technology, information technology, as Tyler will talk about, that's always foremost of their concern, because you heard recent news, which Tyler will talk about in terms of ransomware, all the different things, and specifically targeted even at public entities like school districts and counties and cities. And you've heard those things in the news. But these were things where COVID-19 even added more heartache to these areas. Obviously, funding and budgeting impacted. We know about how the CARES Act is trying to provide some relief to the governmental entities. Some of you were able to receive more relief than others. But those items are a concern, especially within the COVID environment. And then, like I said, information technology, these are ever-present issues. Government entities, as you well know, often struggle with having up-to-date plans in place, whether in terms of disaster recovery and business continuity. And these were their concerns, again, cybersecurity. And this is irrespective of COVID. I think it's been heightened due to the fact that there's been a lot more, obviously using a lot more of the platforms. Here we are using Zoom, Teams, WebEx. I know school districts use a lot of WebEx, and there's just a lot of other opportunities and risks involved in that, in addition to the normal challenges that are faced in information technology. Another one is personnel. There's been a lot of, Jimmy talked about the fact that usually succession plans maybe aren't normally as much of a risk in making sure you have those in place for government. But really, this fits into probably many of us in the call, and myself in this, where so-called baby boomers are seeing quite a bit of turnover. I know in many of my internal audits, I'll start an internal audit. A lot of times we'll pick one because it's from a risk-based approach. We'll pick a particular department or program because that director or senior management in that area is going to retire in the next few months. So we just see a lot of that, a lot of senior management, director levels, finance directors. We've seen that in many of our own clients who are retiring. And it's challenging because, as you know, it's not like you have a lot of time to be able to train up the person to take that person's place. Some of you have the luxury of having be an assistant county manager, if it's a county manager situation, or maybe in the director level, you have someone who and management under the director level that can be trained and anticipating that departure. But those all then pose significant risk areas, and it's always a challenge. Whenever we look at performance evaluations and training, we often have findings for opportunity for improvements that need to be made around the training process as well. Next slide. So here's an example of risk assessment, and Jimmy's touched on this, but really as you look across the entity, this is really important because you're dealing with not just the financial aspect of the entity, but you really are wanting to talk to all the key management, and even depending upon which department or function you're looking at, you're trying to assess the risk across the organization. So the first thing to do, you need to identify all and list out what are all those auditable units, and whether it's at the department or division level, functions or specific programs, you need to get a good, what we call population or list of what's out there that is auditable that we need to make sure we address from a risk point of view. And then we look at various key reports and documents. Always grab the strategic plan. We need to look at that, the financial statements and footnotes, budgets, org charts. Of course, I know you love to hear this, Auditor General reports. All of these things are key in understanding what's out there in terms of risk. And we learn a lot in talking to people. This is key. It's through, I tell people, I find out more ways in terms of how to improve and address weaknesses, improve controls, and identify processes, or even help with, gaining efficiencies or eliminating inefficiencies by just talking to the folks who are doing these things, who are doing the work, who are performing. And we at least talk with the key stakeholders, but as well as with others who work for them. The nuts and bolts are the ones that know what's going on and what things we can find out that need to be addressed. And then once we go through and identify these things, we're going to then, of course, through these steps, we'll identify the risk, and then we'll go through and rank and prioritize. Next slide, please, Jimmy. So here's just, I'm not going to read all this, and this is a way of ranking. You have to rank. You can't look at everything. You can't put controls in place for every risk that's out there. You need to prioritize, and this is the way you do this. Now, it doesn't have to be this many. It can be, some use a numbering system of high, moderate, and low. Just depends on what you're trying to accomplish. One of the things key, I think, that's unique to public sector, Jimmy talked about when you do an external audit in public sector, yes, you look at materiality. And I used to do external audit. Now I do all internal audit. And really materiality, it is still important, but when you get to internal audit, you also have to look at something that doesn't show up in the COSO model in an explicit way, and that is reputational risk. And you know what I'm talking about. That's a risk factor that could be material from a financial state point of view, not material at all, but something happens, a risk of damaging reputation for a public sector entity needs to be considered and is a significant risk as well. Next slide, Jimmy. So here, and Jimmy's touched on a number of these things. I won't read them to you, but here are a number of things to consider. Talked about turnover, both staff and management. I'd say a big thing in government is how much of what's being done process-wise is manual, or how often are there multiple systems, software that's being used in cases that don't properly talk to each other, that aren't proper interfaces. And so, or there'll be, you have your main accounting system, your ERP, whether it's something, a larger entity that might have SAP or PeopleSoft, or other ones that are smaller that will still have these Excel spreadsheets or manual things to do on the side. That creates risk, and that creates issues in terms of having a good system controls to address those kinds of things. And obviously, a big thing in here is what does it look like in terms of segregation of duties? Do we have one person who has control over too many processes that enables them to cover up things? And that becomes a big opportunity for fraud as you think about your fraud triangle. Of course, again, the last one there, degree of public potential scrutiny. Okay, that's your reputational risk. Anytime you do work out there in public sector, and school board meetings, everyone I seem to go to, and even council meetings, that time of public comment, you never know what you're going to hear, and it just, you're always you're public facing. And as you know, that involves a great degree of risk that is very unique to public sector. Next slide, please, Jimmy. So here, just to give you a visual, when you go through, this happens to relate to a school district, but really if you number one is obviously specific to a school district, but all the rest are very applicable to whether you're a city or a county. I know we have a lot of counties and cities on the call, on the webinar. And so this is a way of kind of mapping out at a high level in those main areas that make up your organization. Where is the heat map gives you a good visual of what are those high risk areas you can see. Next, and then this is the one that gives you the universe. Now you're going through and saying, okay, here's all the areas that are out there. And you number those out there, and this is where this is the building block. You can't audit every one of these things. So you're going to go through and work with the audit committee, or if there isn't an audit committee, work with the council or the board of commissioners, depending upon the city or a county. A school district, you work with the school board, obviously, and if they have an audit committee. And we've done this. I know there were a number of on the call. There are quite a few of you out there that have internal audit departments. And like Jimmy says, that's great. And my team works with both. We as a firm work with both internal audit as the outsourced, where we are the internal audit function. We have a number of those, but we also have quite a few where they have a full internal audit department, and then we come in alongside, and it's called a co-sourcing, where we'll work directly with the internal audit director or the chief auditor and bring some, we have some specific resources and expertise that we can bring of value to bring in assisting, even when they have a full internal audit department. And we do a lot of that. Next slide.
Poll question.
All right, so has your organization experienced fraud? So either financial reporting type fraud or misappropriation of assets, or potentially both?
All right. I appreciate Rob adding that specific governmental flair there that he puts in, but that's show you a little bit of an example of a detailed risk assessment and what Rob goes through when we help governmental organizations do those.
Yeah, we are starting to see there are, in some jurisdiction, those risk assessments have become mandatory by local statute. So it's, I'm here in Florida. We're seeing that some, at least here. I can't speak for the rest of. We have people from all across the country, but we're seeing it more and more, for sure.
Right. David, there's mandatory having an internal audit function as
mandatory having a risk assessment process. So you showing the example of the heat map and how the risk assessment specifically works.
Right, but in addition to that, there's also a statute regarding over a certain revenue. School districts that are required now to have internal audit function as well over a certain revenue amount.
I'm going to go ahead and share those results of our poll. Pretty close here. It's interesting.
Yeah, it's it is interesting. Like I said, again, I'm one person, but this sector is a sector where I've seen a lot of frauds come up over the years. So, and that may be why you're seeing some jurisdictions, David and Rob, that are coming up with those risk assessments, those mandatory risk assessments and internal audit functions.
So here we have some back-to-back polls to get through all of our questions. So when was the last time your organization performed a formal risk assessment? You can try and answer it that way. And again, there's no right answer to these questions. Just make sure that you answer so you can get your CPE credit at the conclusion of the session. So I don't know if we shock some people by doing polls back to back and someone answered them and took a quick break, but these ones were back to back. So we'll give everyone just a little bit more time here. All right, I'm going to go ahead and end the poll. So almost half have done it within the last year, but then some spread.
All right. All right, well, let's get moving again. We'll try to pick up the pace here a little bit just because I want to make sure we get through everything. We tried to put a lot of content in here. So, all right, so let's move to principle 10. We're going into control activities now. And again, there's only 17 of these, so my piece will be over shortly, I promise. You can listen to Tyler talk more about cyber. All right, so selecting and developing control activities. Just again, in a nutshell, this is what are you doing after you do that risk assessment to make sure that you're properly putting the mechanisms in place you need to address those risks. And things like this might be use matrices, tools, etc., to map identified controls to their activities, implementing or assessing activities when when outsourcing to a third party, making sure that you're having control. There's a lot of stuff in here over third parties, but making sure that you know what's going on with that and what controls are there at that third party. Big thing is that a lot of folks don't realize in this sector and in others is that when you're using an outsourced third party, a service provider, they are considered an extension of your control environment. So you want to make sure that that you know what's going on there as well. And then considering the types of control activities that you can perform. So we'll talk talk about those and a couple of those things here in just a second. But here's an example of documenting those processes. And so, I mean, it's just a flow chart. A lot of you guys have seen, maybe you got your processes documented in narrative form or flow chart form or whatever. But this is an example. I took an excerpt here, I didn't cut the whole thing, where there are controls A, B, C, D, and E here in different places where they're relating back to a control matrix. But this illustrates an ordering and an invoicing process related to overall procurement. But you can see that. So this is a way that you meet that that first point that we were talking about on the previous slide. All right. Selecting and developing control activities. This is the rest of that. The same principle. Consider alternative controls activities, to segregation of duties. This typically comes when you've got an increased reliance on IT and a lot of smaller entities. You don't have a lot of the personnel around, and so segregation of duties becomes more of an issue. But if you bring in more IT, if you're more of your functions are automated, a lot of times that reduces the need to rely so heavily on segregation of duties. So you want to do that. I know those become, if it's possible to do that, certainly. Another way to try to do that would be is that maybe you can look at some controls that are outside of your particular function. Like maybe you don't have a lot of people in the finance function, but maybe in another department, something that they're doing, a control that they may have there may interact or help you with something that relates to finance, a non-financial control relating to a financial function, and may help with that. So it may reduce some of your risk there. So that may be a way you can do it. So look outside of the finance department if that's where you're at and you need some help with segregation of duties. And increased IT is not necessarily an option for you. Okay. The last one there is, again, has to do more with use automated functions to decrease reliance on segregation duties. And that's really where the next few controls gets into. So, or the next principle, excuse me. Excuse me. Principle 11 has to do with select and develop general controls over technology. Some of you might know these things as IT general controls or IT GCs, but these are the controls that are out there to make sure that all of your IT is working appropriately in the way it's supposed to. It has to do with who can access the technology and how the technology is changed. and to make sure that it's functioning as appropriately. The items that we got here, you want to make sure you're using risk and control matrices, same as you would on some other type of controls, but it helps you map out your control or your technology dependencies. Where are the system? We use a thing that we say here at CRI, we say audit the clicks. And so when you're looking at a process, how many different ways do you click a mouse to go to a certain system or go to a certain database or a certain a certain spreadsheet or whatever. And so when you're following that trail, it helps telling you, hey, well, this is a certain application that is relevant to me or is part of the process, or this is a certain application, and you bring those in so you understand where your technology dependencies are. Evaluate your end user computing, who's doing those, who has access to those. Implementing and assessing control activities when outsourcing IT functions to a third party. Again, that's a service provider. A lot of times, if you get a SOC report, an SOC report, they will cover IT functions with that. And then configuring IT infrastructure to support restricted access. So I want to get to the next one here, and then I want to bring Tyler in and see if he can add some comment on this as well. The second piece of this is configuring IT to support the complete, accurate, and valid processing of transactions and data. That's huge. Nothing matters if you don't have all the information and the information is not correct, and the information that you are processing is not real. You need to make sure all that's being done. So this one has to do with making sure that you're selecting and developing the appropriate technology using an IT application that is valid, that works, and make sure you're getting everything correctly. So your external auditors are probably spending an increased amount of time over this. And as you guys and every other industry and every other client that we've got out there are becoming more and more automated and more IT dependent, controls like this become more prevalent and more important in the overall internal control structure. Security access. Tyler's again is going to touch on a lot of this. SDLC system development, the life cycle over a package or in-house, from the time that you develop it or the time that you buy the package, everything's got a life cycle, right? And then it kind of goes to where it's good and you make changes on it, and then it gets to where it's not good and then it kind of fades away. So what do you have processes, and how do you evaluate your system development lifecycle over as all that's put together? Tyler, you want to jump in and add anything on this? You are our security guy.
Sure.
IT security guy.
Yeah, like Jimmy said, there are slides later that are gonna touch on this stuff, but where the time is now, we may not get to them. So we can talk about this kind of thing now. The biggest piece of administering security and access that we want to that we kind of want to establish here is the logical security over really any system that can access any private data, and that includes formalizing your account setup, and how you maintain and review that account access. So what each account can do, as far as and making sure that it's in a least privileged sort of situation. They don't have more access than they need to do their job. We want to make sure we're adhering to some best practices as far as our passwords are concerned. The big push in the industry now is length. The longer the password, obviously, the more secure it is. So we want to make sure that that's in place. And as far as the SDLC piece of this is concerned, Jimmy's right. SDLC is typically reserved for a development, but any packaged software is going to have patches and implementations that are going to have to be overseen as well. So we want to make sure that process is in place and well documented, whether you develop that software in-house or not. That's true.
All right. Appreciate it, Tyler. And again, we're trying to speed up because, again, I know he's got the most interesting part and you guys want to probably hear that. So trying to get through all this. All right. So control 12 here deploys policies and procedures. Again, when you set up a control, the way you kind of roll it out through a policy and a procedure and how these are done. So you want to make sure you're developing and documenting those. Documentation is the key thing. It's probably the biggest issue we see across the board in terms of when controls are deficient or there are gaps is that it's not necessarily that they're not there. It's just that they're not documented, and it's hard to figure out what's actually in place. All right. Making sure they roll out through your business unit or your functional leaders. Again, each one's going to apply different. And again, that goes back to what I've said over and over again, that all this stuff cascades down from the control environment at the top. And when you get down to this activity level, you're at the transaction level, and it's throughout the entity at those functional leaders. All right, conducting regular and ad hoc assessment of control activities. That's going to kind of carry over into monitoring, but that's the way this framework works, is that, one component kind of feeds off the other. But, are you making sure that the controls are working, or that these things are doing that they are in place, and that they're doing what you intend them to do, and they're operating again and again, time after time. All right. Some types of those, we want to make sure that you got the right type of thing in, just to make sure that I think this is a good slide, because it may give you something that you may not have considered. But obviously there's approvals and authorizations that you got. Over certain amounts, you want to make sure that those are set up and based on roles and responsibilities and where people fall out correctly on the org chart. Verifications. A lot of that can be automated in terms of making sure that the information in the transaction is legitimate. Physical controls, a lot of that is over physical assets, making sure that there are locked rooms and storage rooms and things like that. Controls over standing data. That's a lot of the stuff that we talk about with the IT controls, making sure that that you've got data sitting in a database. Has to do with logical access, who can access that, who can manipulate the data, who can change the data, those type of things. Reconciliation is a very common form of control, probably the most common form of control that's out there. And again, you just want to make sure that your data behind those reconciliations is good. Supervisory control, the last one that we've got here, that's one that's very, very commonly used. A caution that I would use in those is that you want to make sure that the control is precise enough to do what you intended to do. So if you're trying to reconcile expenses, or look at some invoices and make sure that they're appropriate, somebody at a really high level in the organization or outside of that functional unit where the expense occurred may not be the best person to review that. So you want to make sure that you've got the appropriate level of supervisory review looking at whatever you're trying to get them to look at. So and that may be a high level, maybe a lower functional level, but you want to make sure that those match up. Okay. All right, next poll question.
All right, question number 7. What is the majority type of control used within your organization? Physical controls, controls over data, reconciliations, or supervisory controls? Jimmy, I know a question that I hear sometimes is, what would you say to those small organizations out there when there's only a couple of people within the accounting department and they may struggle with the reconciliation type controls and supervisory controls, just based on the number of people?
Yeah, well, that's two things. We touched on this earlier but one is that the more that you can automate your process, and again, I realize and recognize that that's not always applicable, but the more that you can reconcile or add IT to those, because a lot of those reconciliations are done automatically through the technology now. So, and you may have a function in your ERP system that you don't know that does those, but a lot of those reconciliations are automated now and helps you there. The second one would be is kind of what we touched on. Are there departments outside of finance that they do certain checks of validity of actual operational items that you could use and bring into finance to try to validate and reconcile what you've got from a finance perspective to what they've got from a non-finance perspective. And if you can do that and bring those together, that kind of helps make it up for your small department.
All right, thanks. So I'm going to go ahead and end our poll, share our results. And again, I think as expected, primarily the reconciliation and supervisory controls.
Yeah, that's what I expected on that one. That's typically where they fall. All right, moving along, information and communication, real quick. This first bottom here is just a good tip on this. Create an inventory of information requirements. And this is okay. Who do you have to make reports for? All right, you have to make you have to deliver your external financial statements. You have to issue those, but every month you have to issue or create this report for this person, or this report to this to the city council or the school board, whoever. You've got to do that every month or every quarter or every week or whatever. What are your information requirements? And so it's a good thing to just create a little list of those and say this is what I'm required to do, and then get an idea from how you go about putting those together. But the second bullet point there touches on getting information from external sources. Most of this component has to do with quality and relevant information, right? Because you got to think about everything as this relates to all of internal control. You got to think about it is that if your information is not good, if it's not quality information, it's not good or correct, and if it's not relevant to what you're trying to perform, then it blows up the other four components. That's what I'm saying. All four or all five of these components have to work together. So obtain information from external sources. How does that affect what you're doing? Don't just have your blinders on as you're putting things together. Financial and non-financial communication. Touched on that with the control issue, but on David's question a second ago. But it's also very important to make sure that do the numbers that you're recording, does that make sense with what the actual activity that happened? And so you need to make sure that the people, not just looking at reports, but make sure that the people are talking to each other. And so I would encourage that. I would encourage regular meetings with those folks to make sure that your information is working back and forth. All right, and create and maintain information repositories. Keep them up to date, but have information readily available that you use routinely, and so you know where these things are. And again, like I said, keep them up to date. All right. Relevant information, again, along the same, we talked about it being relevant and talked about it being quality. Use applications to process data and information. I don't think that's a big deal in 2021 anymore. I think a few years ago, we had some folks that we were talking to in the local government area that were pretty manual in most aspects, and even surprisingly so for that time. But if you look at this more and more every day, everybody's becoming more automated. So I think that issue is kind of going away. But you also want to make sure that you've got an application that you're getting the patches on and the updates on, like Tyler was referencing. Make sure you're getting your maintenance and your updates on that, so that that your application continues working properly like it's supposed to, and that you have the controls over access to that information. So again, your information continues to be quality, so it processes that information for you. All right. These other things are I kind of touched on those as well, so we'll move along in the interest of time. Communicate information regarding external objectives and internal control. This is communicating internal, but you want to make sure the stuff that's coming in external, that you're communicating those, to your folks. So communicating internal control responsibilities. Do people know what they're supposed to do? Do they know what they've been assigned and what they've been asked to do? Development guidelines for communication, for governance. Again, that goes back to what we talked about with control environment. Do you have normal agendas and calendar, set calendar meetings with those in charge of governance, and is there a regular agenda, and is there communication back and forth with people's control responsibilities and how that's going, or the results of control evaluations, how that's going, corrections, how that's going, those type of things, which you want to make sure you got those, they're going back and forth. So same thing. This is an important one, and we touched on it earlier as well, but like I said, all of these things work together. But do we have something in terms of a whistleblower program to the organization's personnel? Do we have something like that that's available? You saw the poll question where and most of you got it right, where most of the fraud that's been detected comes through a whistleblower program. What do you have there? What do you have? Have you established a hotline or some other type of program that would help with that? communicating it through alternative channels if you've got some type of internal control officially, not necessarily a fraud issue, but if there's some other type of control concern or something that needs to be reported, is there maybe a mentoring program that you encourage people to talk to management, when they see something like, an open door policy or something like that, where people can say, hey, there's something wrong or something that could be improved. Can we work on getting that fixed? All right. And then cross-functional, we've talked about that. Financial, non-financial people, cross-departmental. That's key to get all these folks talking, because again, it's one entity and everything affects everybody. So you want to make sure that everybody's talking and they're developing internal controls there. Externally, I won't spend a lot of time on this. This has to do with, again, those external parties, those service providers, those customers, things like that. Are you communicating your expectations for people who are working for you for internal control? Are you getting information from maybe from a federal agency or a contractor or somebody, if they've got certain expectations of internal control for you, and things that you have to do to adhere to requirements of their contracts or requirements of their grants or requirements of or whatever, in terms of something that they require as far as doing business with them? Do you have those things in place, and are you communicating that to them, and are they the communication going both ways? All right, next poll question. We got a lot of poll questions.
So how many external service providers does your organization use? I'm not going to read off the answers here. I think those are pretty straightforward.
Yeah, this is just, kind of an idea to think about that, but where we're going with it, obviously, the more external service providers that you have, and we mentioned this, is that they are an extension of your internal control environment. And so you may have risk there in terms of knowing what they're doing, knowing how they're handling your information, knowing their expectations for internal control going the other way, and managing that communication. So there may be hopefully something that maybe you haven't thought of before in terms of addressing that.
All right, I'm just about to end the poll. So the last couple people can get in and vote. So either 1 to 2 or 5 plus.
All right.
A few. Yeah.
So a little or a lot, kind of spread. All right, looks like we got another one.
So how do you feel about the efficiency and effectiveness of your organization's IT applications? Have to read the last one because I feel like those guys on Office Space beating the printer with a bat. I think there was some feet involved too, but mainly bat from Office Space.
Everybody loves their IT system.
Almost as much as how much people love changing their IT system. All right, we're just about there. I'm going to go ahead and end it. Share our results.
Kind of surprised there a little bit. All right, most people like it.
All right.
All right, moving along and monitoring here at the end. And again, like we said, in a nutshell, monitoring is what are you doing to evaluate how your controls are working. And so there's a lot of different things that you can do on this part of it, where it's conduct ongoing and separate evaluations. And so the evaluations that you do, you can do things like, I won't go through every one of these, like I said, in the interest of time, but maybe I do like the part where designing and implementing a dashboard or some type of establishing some type of baseline or metric to see that this is how I would expect things to go. This is what I would expect to happen. And you're periodically checking on those. You're reviewing the operations activity of what's happened. You're reviewing those and saying, this is what should happen. And so that is a form of review to determine did your control work? Or you can also do separate testing, internal testing of the controls to themselves to see that you're doing. And then there, of course, there's the last bullet point there where internal audit can come through and test the control for you, test the operating effectiveness of those controls for you. All right. Principle 17 is, okay, we're looking at the controls, we're evaluating them, we're determining that things go wrong, and we're determining that they're either operating effective or they're deficient. What are we doing about it? Okay. Are we reporting them to the people who are in charge of those controls? Or are we reporting those to those in charge of governance so they know what's going on? And then is that tone coming back from them to, okay, what are we doing to fix it? How are we fixing those, and how are we taking care of them? So that's very important as well. That's also an area that internal audit helps with in terms of managing that piece. All right. Now we're going to move into cybersecurity, the piece that probably most people are interested in.
We'll see about that.
As far as going to this. Yeah. All right. Tyler.
Sure. I'm going to try to get through these as quick as possible. We got a couple of poll questions I know we have to hit. So these are going to be real quick hits on these slides to make sure we get them all in. This is a couple of reasons why local governments are such a high value, or can be a high value target to attackers. Obviously, your connection back to even larger networks than your own. Fairly large payrolls, a lot of places to get lost, kind of lost in the shuffle as far as that fraud is concerned. Some high profile terror targets. You may have heard of the Colonial Pipeline that recently occurred, and with the ransomware there. Lots of data, and then of course 2020, 2019, a lot of hacktivists as well, elections and admin politics, etc.
That doesn't happen here.
Yeah. Next slide, please, Jimmy. So a Blue Voyant report. These are some statistics that I thought were interesting. Estimates that there was an increase of 50% from over 3 years back in September of last year on local governments. So that's a pretty significant increase in our industry. SunGuard also reported that at least 39 states of the 50 total experienced some kind of a ransomware attack in 2020. And of those, the largest ransom reportedly paid was $500,000. That is, of course, the key word there is paid. Doesn't mean that that wasn't the largest asked for, but it was the largest one they had to actually pay to get that data back. So it is really important to know your risk when you're associated with ransomware. I think we have a poll question.
Yeah, the attackers negotiate. All right.
Yes. Yeah.
So polling question 10, do you feel like your organization is vulnerable to a cybersecurity attack?
This is a little bit of a trick question.
It's an opinion.
Yeah, Jimmy, that's fair. It's an opinion. And if I were given this on a test, I would say there is a right and wrong answer here, but you're right. In this context, maybe we can call it an opinion.
All right, we're just about done. We've got 91% people in. Just a couple more seconds to make sure everyone can get their CPE.
Mm-hmm.
So I'm going to go ahead and end the poll.
There you go. This is pretty good spread. The 1% know who cares about us that's a tough pill to swallow. I think that people tend to think that way the smaller the entity gets, but really and truly, any size entity can be the target of an attack for sure. So this is pretty good spread. I think this is right. Let's see. So the next slide, where are our high risk areas and what can we do? So the highest risk area you'll see I've bolded and underlined here is people. The next slide, we'll get into this a little bit, but people are your first line of defense, but they're also the easiest dam to break. most high profile attacks these days occur because of either human error or social engineering scheme of some kind, something like that. So really that's always going to be the big piece to any risk management platform or process. External support personnel are an important thing to think about. Jimmy talked a lot about your external service providers being an extension of your controls, so that's kind of a repeat of that. Cloud service providers, if you use any SaaSes leaving documents up in the cloud, doing any work where you don't own the servers, all of the data sitting at someone else's servers, you need to make sure that that service has as good a controls as you do or better. And then any electronic ingress and egress point, basically any way in or out of your network as far as data is concerned, those are always going to be high risk areas, kind of no matter what you do. The data touch points here, this is just a couple of examples of places where data may be in use, in transit, at rest, or in storage. And those are the 4 states of data that we always want to make sure that we're thinking about. Who's using it, where is it going, where is it stored when we're not using it, and where is it in basically cold storage where it's not for use, it's for backup purposes or for recovery purposes. A big part of this process is going to be understanding what is actually in your control as a centralized IT sort of environment. What can IT control? They can control the access, logical access, passwords, etc. They can control the perimeter, like a firewall or a VPN connection. They can control whose computers and servers get patched and when. So when the Windows updates come down, they can make sure that nothing's on the network that doesn't have an antivirus installed on it, and they can prepare for disaster and back up and test that backup to make sure it's recoverable. And then they can also restrict end users from installing unapproved applications that could potentially be harmful to the computer or the network as a whole. Training, there's a couple of slides here on training, and we'll go over these pretty quickly. Training is really, really important. If you'll remember that people was underlined and bolded, the only way to get those people to operate effectively is to train them. It's not fair to assume that they know everything that they're supposed to do from a cybersecurity standpoint. So you want to make sure that there's a training process in place. And that process happens at least annually so that you keep it current and employees stay aware of current threats. Like I said earlier, most modern attacks occur via phishing email. Currently, there's a couple of theories, but the current leading theory for the Colonial Pipeline attack was that there was a phishing email. I mentioned also human error, and if you remember, you may or may not have read about this. It was pretty high profile in the tech world, but there was a SolarWinds attack, which was pretty concerning. That came to light towards the end of last year. That actually occurred because of an intern having an insecure password. So that goes back to not only keeping your password controls in order, but you need to train your people to know how to be secure in a case like that where there was no central control.
Did I go too soon?
No, you're good. You're good. We're booking it. We're booking it, Jimmy. There's also a lot of merit to ensuring your employees are trained in general security practices. So you want to make sure that if you are allowing them to use portable devices, that they know what not to do with those. Like, don't pick a portable device up out of the break room and plug it into your computer. A remote access obviously is the third bullet here, but it ought to be a big first bullet because that was sort of the big shift in the last year. But people really need to know what their security responsibilities are remotely. So if you're responsible for patching your own system or having your own antivirus, anything like that needs to be really, really clearly communicated to each individual person. All right, and I think then we have a poll question.
So going back to training, so when was the last time you received training from your organization on phishing or other types of cybersecurity issues? so often when you hear someone talk about fishing, there's always this joke about actual fish. And Jimmy made it. Blame this fourth option
Just
joke.
blaming that on me.
So I'm just about to end the poll. Get the last couple people get their votes.
See if we've got any pranksters in the audience. Couple. Let's see. That's pretty good. 75% within the last years is really good. You know, you really want that to be every 12 months again, because you want people to, one, you want it to stay current, because this kind of stuff moves from year to year quite a bit, but people tend to start to, you know, get lax after about a year. So if you're not doing some kind of training or a fishing exercise or something like that once a year, then people are going to start sort of, you know, not expecting it anymore, and they'll lose that. So, but that's pretty good. So what you want to do is you want to create a cybersecurity strategy. And just like we talked about, when you want to understand what was in your control, you want to also understand what's out of your control and how you can potentially exert some control over it, if not indirectly. You know, obviously we want to understand the risks around the use of third parties, which we've talked about a lot already. You know, does a third party have, hold, use, store our high value data? And have we been given some kind of assurance that there are controls in place on their end to keep that data secure, like an SOC report, or an ISO report, or some kind of attestation of controls. The other piece of that is that someone then has to review that report. So if that report is available, great, but someone, you know, at the entity needs to be looking at it when they issue it to make sure there's nothing, you know, nothing of any concern that they need to be following up with the vendor about, or if they need to, you know, worst case scenario, go look for a new one. So that's you know, that's a really important part of this. Next slide, please, Jimmy. An IT risk assessment, there's been a lot of, we talked a lot about risk assessment already, and the IT risk assessment kind of follows the same sort of format as that happens. You want to identify where your threats are, and what systems those threats threaten. You want to identify anywhere data is coming into your network, so that'd be through the firewall if there's a remote access like VPN, something like that. And then you want to anything leaving. You know, what's going out of the via wireless access, or do we have some kind of a wide area network back to, you know, maybe a state or the federal government or something like that? That's possible too. So you want, when you're doing that process, you want to make sure you hit these bullet points as best you can. You also want to detect or monitor for potential intrusions or other issues. That's, you know, obviously looking for a notification of some kind if a virus outbreak occurs, or if somebody is trying to hack into your network, you want somebody to know about that ASAP. Then we're going to create an incident response plan. This is really important to have that documented. Like if we do end up with ransomware on the network, how do we respond to that? How do we contain it? How do we you know, make sure we can recover, etc. How's the reporting happen? How does the tracking happen? We want to make sure that that's formalized and tested to make sure that it works. And then finally, it is our recovery plan. So if an incident occurs, how do we get back to normal? What recovery mechanisms do we need to have in place? Do we need to be looking for potentially a third party to help us get through that? We should also be, if we can, conducting scenario-based testing of the response and recovery plan. So, you know, let's pretend we're hit with ransomware. How do we contain that? Can we restore from backup, etc.? And I believe that brings us to the final poll question just under the wire.
Polling question 12. So do you feel your organization has adequately communicated your responsibilities to you in relation to your organization's recovery plan?
I think this is a really good question, because it is, you know, while the plan does absolutely need to exist, it only really works if the responsibilities of your users have been communicated. So you could have the best disaster recovery plan in the world, and if nobody knows what they're supposed to do, it falls apart. So this is a good thought. This is a good thought exercise for folks. If you're not directly responsible for coming up with the plan, do you know what you are responsible for if something does occur? This is a good thought exercise for that.
All right, so I'm going to end the poll here, and then we'll wrap up our session today. So a quick share.
So 60-40, that's yeah, that's what we would normally I would probably have guessed. So those of you that answered no, it might be time to start asking some questions just to see if there is anything at all that you need to be aware of.
All right, so I think we've been able to address questions that have come in throughout our session today. So I don't think there's any other outstanding questions out. And I want to thank our presenters, Jimmy, Rob, and Tyler, for their contribution today. I think it was a really great session. Going forward, go to the next slide. Our fourth session for this year, we're going to do a kind of a general GASB overview. So what are the standards that are coming up? What is applicable for this year, applicable in the near future, then what are the big projects that GASB is working on? And there are some really large things that they are in process with. CRI has a podcast. We do actually have some programs on there specific for government. So anywhere you listen to podcasts, if you want to hear a little bit more information, I'd encourage you to go there and see our It Figures podcast. And then you can connect with us on social media. We've got a lot of great information and updates. And thank everyone for participating today, coming to our session. And the CPE certificates will be out within the next 7 days and more than likely sooner. So thank you, everyone, and I hope you enjoyed our session.